Hello and welcome back. This is Chapter 7 of Price Analysis, a fundamental approach to the study of commodity prices. In this chapter, I wanted to take a step back and talk a little bit about what happens to the market during some of the important USDA reports. And we've mentioned before in the class that the market, oftentimes, especially when the reports inject new information into the market, the prices of the relevant commodities can respond drastically, whether that's spiking up or crashing down. And you can imagine that if you could get your hands on one of these crop reports or USDA reports ahead of time, you could probably make a substantial amount of money by trading based on that knowledge. And that's actually a very important thing, and it's actually happened before, and so we'll talk about one of those examples, and we'll have a little bit of fun too. So any of the reports that are generally considered to be market moving are prepared under lockdown conditions. That means when the USDA statisticians and economists and other staff members who are preparing these reports, when they walk in the room to prepare the report, they lock the doors behind them, they cut the phones, they cut the internet, and nobody communicates with the outside until the report is made public. And that prevents any incentive of any of those USDA employees from trying to engage in any shenanigans and make some quick profits. So let's talk about one historical example that we have. It comes from this wonderful publication that the National Agricultural Statistics Service wrote about its own history in safeguarding the country's agricultural statistics. And they dub it the Great Data Leak of 1905. So back then, the crop report preparations were not produced under a secure setting at all. These three guys who were supposed to do the job would just get together. They would take the evidence, produce the numbers, and then release the report. And there was no security about it at all. Well, it came to light that one of them, whose name is E.S. Holmes Jr., had a partner who was a New York cotton trader named Louis Van Riper. And after they would set the report, then Holmes would go out and call Louis Van Riper. He would place some trades that would be profitable based on the crop estimate that they were putting out. And it came to light because the USDA staff members realized they needed to revise a number. And so after Holmes had already communicated one crop number to Van Riper, they had to revise the number, put out a different number, and it turned out to be exactly the opposite of the original report. So Van Riper was incredulous when his trades started losing money, and he started babbling about how he had the numbers beforehand, and so they couldn't have been wrong. So he was discovered. There was a very big controversy, and that set off a whole chain of events that has led to our very, very tight and secure conditions under which we currently produce USDA reports of all kinds that move the market. This is a little bit similar to the plot line of the famous 1980s movie Trading Places, and this movie has great lore among traders and anybody who's interested in commodities. If you're interested in commodities as a career, you've got to watch this movie and then watch it over and over again because people still talk about it in the industry, and it's just really fun. It's got good scenes about what physical trading floors used to look like back when they were full of people and not just servers sitting in a data farm somewhere. So the plot line of the movie is this. Dan Aykroyd and Eddie Murphy are the protagonists, and these two rich guys, the Duke brothers, treated them very badly in the build-up of this movie. And the Duke brothers had also engaged in this scheme to steal the orange juice crop report and then make a lot of money on that. When Dan Aykroyd and Eddie Murphy find out about this plan, they end up switching out the crop report that they stole and giving them a fraudulent one, so that the Duke brothers would place buy orders thinking they would make a lot of money when really the crop report was going to make the price go down. So Dan Aykroyd and Eddie Murphy start selling a lot of orange juice futures contracts. And there's this really famous scene that I've embedded in the book below where they are placing their trades ahead of the report, And you can see the frenzy on the trading floor is just, it's not exactly the way the trading floor used to look, but you kind of get that idea of the spirit and the energy. And when these crop reports, so that was a funny story that almost can't really happen anymore. But you do get an idea of what happens in these markets when the crop report comes out and it has really serious info that the market thinks needs to be reflected in the price, and it goes very quickly. And people make a lot of money and they lose a lot of money on those days because the price moves a lot. So check out the clip. It's really fun. The other thing I want to talk about in this chapter is to make you aware that these report release times are a little bit fluid. It's kind of easy to think when you start studying a market that the way things are right now are the way that they've always been. But actually, the USDA has changed their report release times a few times over the last, I don't know, 10, 20, 30 years. And the exchange, the CME group, the main exchange that we study, has actually fiddled with start times and stop times of when these markets trade quite a lot, because they're trying to attract as much volume as possible and as much liquidity as possible. And if they have the market open during hours when no one wants to trade, that's probably a bad idea. So this section just reviews when reports used to be released, and this is true mostly for the grain market, so corn, soybeans, and wheat. So prior to 1994, the reports were released around 3 p.m. Eastern Standard Time, and that was a pretty good time frame for the USDA employees because they could take the peripheral information and go into lockup at like 6 or 7 or 8 o'clock in the morning, produce the report, release it at 3 p.m., and then everyone could have a pretty normal workday. Market participants didn't really like this arrangement though, because when the report's released at 3 p.m., the daytime session of the commodity market has closed. And that means that price discovery in light of the new information has to happen in the overnight session. And so you would have traders, who need to adjust their positions or need to hedge risk or whatever. Instead of going home at 5 o'clock like normal, they need to stay until like 6 or 8 and do the trading that they need to do in the overnight session in response to the 3 p.m. release. So what they did is in 1994, they changed the release times to 7:30 a.m. And at that time, that was a break in the market. The overnight session would close I think at 7 or 7:15, and then they released the report at 7:30 a.m. And then I think at that time the daytime session was opening at 8 a.m. So market participants had about an hour to digest the information, decide whether they were going to buy on the open or sell on the open or sit the day out, whatever. And that was good for market participants. However, there were two problems to that, and recently they decided to make another change. So one problem is that for the USDA staff, releasing the report at 7:30 a.m. meant they needed to come in on report days at like 3 o'clock in the morning. And they did that for quite a while, but they didn't like it for obvious reasons. And as we got to more recent years, traders started not liking the idea that we were releasing reports when the market wasn't open. Now that we've got proliferation of electronic trading, a lot of market participants argued that we should just release the report during live trading, and then everybody can interpret the information as fast as they can, and then just leave it up to the market competition to decide who can be fast enough to trade in real-time report releases. And that worked pretty well for the USDA because they could change the report release to 12 p.m. Eastern Time, which is 11 a.m. Central Time, and have a kind of normal workday if they come in at 5 or 6 o'clock, prepare the report for 12 p.m. release, and then they're kind of done for the day. And that's the way it's been since January of 2013. That's the way it is now. So that's why the other day in class, after the WASDE report release, I was able to come in at 12:30 and tell you what happened that day because the report had been released at 11 a.m. So the last thing I want to make sure you're aware of in Chapter 7 is to really nail home which USDA reports tend to move markets, and those are found in Table 1. So let's talk about each of those in turn. The first one is the grain stocks report, and that's only released 4 times per year. So once at the end of March, once at the end of June, and then the next quarter, and then the next quarter. And so we introduced the balance sheets in Chapter 7, and we talked about how that ending stocks number is really important to determine markets. When stocks are high, we have a lot of stuff, so prices should be low. When stocks are low, prices should be high. So this report really provides a lot of information to the market, and sometimes it can cause really strong price reactions. And so you want to be aware when grain stocks days are coming up, and you don't want to be blindly trading for fun when the grain stocks report is going to be released. The second one is the prospective plantings report, and this one is released once per year at the end of March. It's actually released in conjunction with the grain stocks report. So this end of March report day is a very big day. And the prospective planting reports gives the results of a USDA survey where they go out and they ask a bunch of farmers, how many acres do you intend to plant of corn, soybeans, wheat, milo, all the crops that they cover. And this is released on the last day of March. So that's where we get our first idea about what the acres number in that WSDA report is going to look like. The next major report we get is the planted acres report. That's at the end of June. That's also a grain stocks day. So again, like the prospective plantings report release day, planted acres day is very big because we get planted acres and grain stocks. It's released on the last day of June. And it has a similar effect to this prospective planting report. On planted acres day, people are wondering if farmers have adjusted their acreage plan from what they told the USDA as of what came out in the prospective plantings report. And like we said before, that can be affected by weather or by changing in relative profitability between corn and soybeans because the price of corn relative to soybeans has moved either up or down. So last day of June, that's a big day. The next in line come 2 lines for the WSDA report, and I've noted particular months there because when it's before the harvest season, like in May, June, July, the WSDA isn't really that important because we don't get any information that we didn't know from the planted acres report or the prospective plantings report, and it's still too early to make much guess about yields that we wouldn't have known from just estimating a trend line. So sometimes it's the October report that's important, sometimes it's September, sometimes it's August. I just put October, and you should think of it as sort of the first time we get real estimates about yield in the fall. That's when the WSDA is going to be important. Now I give a second line to the January WSDA report because so after the crop has been harvested, the USDA will make an additional survey that they can pin down yields with much more accuracy than they could while they're trying to estimate it during real time of the harvest season. And so sometimes you can get pretty significant revisions even from December to January because they've done a more thorough job estimating yield in for the January report. But it is important to note that we do get a WSDA report every single month. I've just highlighted 2 of those months that tend to be kind of important for markets. The last one there is the crop progress report, and that is released weekly during crop production season. And so what this report looks like is a survey where they send out to farmers and they say, what % of your crop looks excellent? What % of the crop around you looks very good? What % of your crop looks good? And so on and so forth. And that's released every Monday at 3 p.m. during the growing season. And sometimes this report can move markets, especially during the years where we see drought creeping in pretty rapidly. Like in 2012, you would see the crop progress report responding to the Monday crop progress report, where you would see conditions through the month of July deteriorating week by week, just more and more and more. Unless there's a big adjustment in conditions, though, there usually isn't that big of a response to the report, but it is one that's watched pretty closely by people in the trade. And when we're having a big movement in the conditions, especially downward, it can be an important report. So that pretty much concludes what we're going to talk about in Chapter 7. I'll leave this last bit for you to read by yourself. I just wanted you to have some specific examples of what it looked like when the markets responded. And so you see some price charts there where you see the overnight session, and then a report release, and then the market sort of opening during the daytime trading session at much higher levels and with a lot of volatility. So you can just take a look at that and get a feel for it, and that'll conclude Chapter 7 for us.